Everyone tells you the S&P 500 is the safest place to invest. But what if I told you it's secretly one of the biggest AI bets you can make right now? Sounds crazy, here's why. When you buy S&P 500 index fund, you're probably imagining your money spread evenly across 500 companies. Nope. Around 40 cents of every dollar is concentrated in just 10 giant tech companies. Apple, Microsoft, Nvidia, Amazon, Meta. Different logos, same AI race. It's like paying for an all-you-can-eat buffet. Then discovering 40% of your bill went toward unlimited lobster. If lobster prices crash, your balanced meal suddenly doesn't look so balanced. Now here's where it gets interesting. These companies aren't just investing in AI, they're spending hundreds of billions building data centers, buying chips, and expanding infrastructure. Some are borrowing massive amounts because everyone's convinced AI will generate huge profits later. Notice that word, later. Today's stock prices aren't only based on today's earnings. They're based on tomorrow's expectations. Investors expect AI to change everything. Higher expectations push stock prices up. Rising stock prices make it easier for companies to raise even more money. They spend even more on AI, which creates even more excitement. That's an AI feedback loop. It works beautifully, until expectations get ahead of reality. We've seen this movie before. .com stocks, crypto hype, even housing. Amazing technology doesn't always mean amazing investments if everyone already expects perfection. So what's the smarter move? Instead, putting all your eggs into one AI-powered basket, spread them across the world. Global funds like VWRP or other all-world ETFs reduce your dependence on a handful of American tech giants. You're still investing in growth, just with a much wider safety net. Then look beyond the biggest names. The next wave of AI winners might not be the companies building the engines. It could be smaller businesses creating useful AI tools for healthcare, finance, education, or manufacturing. Think of them as the app developers during the smartphone boom instead of the phone makers themselves. Next, keep some gold. Gold doesn't generate earnings, but when markets panic, it often becomes the financial version of comfort food. Nobody gets excited about it during bull markets, but everyone suddenly remembers it when things get messy. And finally, keep cash. It sounds boring, but Warren Buffett has shown for decades that cash isn't just sitting around doing nothing, it's opportunity. When everyone else is forced to sell during a market crash, cash lets you become the beer. AI could absolutely reshape the world. But betting your entire portfolio on a few companies winning that race is very different from investing responsibly. Sometimes the smartest investment isn't chasing the biggest story. It's making sure your future doesn't depend on just one story having a perfect ending.